Good morning everyone. Una sa lahat, I want to extend my warmest welcome to all the guests and participants of the Financial Fitness Forum 2025. It's an honor to share before you today and be part of this incredible event once again. For the past several years that this platform has been running, I've had the privilege of being a frequent speaker. And every time, I'm amazed at how this forum continues to empower individuals to take control of their financial future. For that, we owe a huge thank you to our founder, Mr. Henry Ong, whose dedication and vision have made this platform a powerhouse of financial education. Kaya naman po ngayong araw, we're diving deep into one of the most crucial topic in wealth building: managing risk and diversifying your portfolio. Yan po ang binigay sa akin na topic. So ang tanong, handa na ba kayong duguin ang inyong mga ilong? But seriously, let's face it. Ang kumita ng pinaghirapan nating kita on a monthly basis is one thing, but keeping and growing it, lalo na sa ganitong mga pagkakataon na walang kasiguruhan, is a whole different game. Alam ko mahaba-haba ang araw na ito, pero I hope you take full advantage of this whole day session, absorb as much as you can, and most importantly, apply what you can learn. Because at the end of the day, financial fitness isn't just about knowledge, it's about action. So let's get started. Now, before we dive in, let me ask you a question. Nakaramdam na ba kayo ng takot sa pag-i-invest? Or natatakot ka ba ngayon sa lagay ng investment mo? Maybe you've heard horror stories of people losing their entire savings in the stock market overnight. Or maybe you're afraid to even start investing because you don't want to make the wrong choices. Well, if you nodded to any of those, you're in the right place. Today, we're going to break down how risk works in investing and, more importantly, how you can protect your hard-earned money while still making it grow. Pangako, by the end of this session, you'll feel more confident and equipped to handle your investments like a pro. Imagine this, no? Nagpapakahirap ka magtrabaho, pinilit mong makapag-ipon, and finally, you decided to invest. Excited ka na until suddenly, biglang bagsak ang market. So, panic sets in. What if I lose everything? Sound familiar? The truth is, investing always comes with risk. But here's the good news. You don't have to fear it. You just have to manage it. That's what separates smart investors from those who get stuck on the sideline. At ngayong araw na ito, we're going to talk about exactly how to do that. How to take control of your financial future by managing risk and diversifying your portfolio. Because the goal isn't just to grow your money. It's to protect it, make it work for you, and build lasting wealth. So, let's dive in and learn how to invest with confidence. Sa kaliwat ka ng hindi magandang nangyayari sa ngayon, both internationally or domestically, bakit pa ba tayo mag-i-invest? Krisis na nga. Aminin na natin, whenever there's a crisis, obviously, people freak out. Huhugutin ng mga investment, doesn't matter kahit may mga charges pang involved. Panic sell their stocks and hoard cash na para bang end of the world na. But smart investors, they see opportunity. Why? Because historically, markets always recover and downturns are the best time to buy undervalued assets. Crises create investment opportunities. Stocks go on sale when the market dips. Risk is always present. Nandyan niya lang yan palagi. Pero ang mga long-term investors, they thrive. Economic downturns often lead to the biggest market gains. Pero before we even talk about opportunities, let's talk about risk. Because understanding risk is the key to not losing money. Madali lang naman sana ang investing na yan kung ang stock market ay palaging pataas. Tama? Unfortunately, that's not how reality works. let's talk about some of the major risks that can affect your investments. Ano ba itong mga ito? Una, nandyan yung tinatawag nating market risk. Ito ang most common type. Of course, stock prices fluctuate, pero minsan or madalas dramatically bumabagsak ito na hindi natin inaasahan. Kung nararanasan mong biglang bumagsak ang value ng portfolio mo at parang naghahanap ka bigla ng meditation guru dahil hindi na enough ang take a deep breath sa'yo, that's market risk in action. So meron din tayong tinatawag na inflation risk. Imagine you saved 100,000 sa ilang taon mo itong pinagtrabahuan. Today, that 100,000 can't buy as much as it used to be. That's inflation eating away at your money. So, liquidity risk. O sa mga financial advisor na nandito, alam nyo po ito. Ever tried selling something but no one wanted to buy? That happens in investing too. Some assets like real estate take time to sell without losing value. So meron din tinatawag na interest rate risk. When interest rates go up, bond prices tend to go down. If you're investing in bonds, you need to watch this. And also credit risk. If you invest in corporate bonds or lend money, there's always a chance the borrower might not be able to pay you back. And last one, political and economic risk. Elections, wars, pandemics, these things shake up markets. We've all seen how global events can cause sudden market swings. I know, ngayon ramdam na ramdam natin ito, di ba? Good news, the good news, you don't have to fear this risk, you just need to plan for them. Investing is like riding a roller coaster. If you panic and jump off the lowest point, you lose. Pero kung mag-i-stay ka, stay seated, and trust the ride, you'll be fine when the market goes back up. Here's the thing. History has proven that the market always recovers. Tignan ninyo ito. Minsan ang emotional maturity natin sa pag-i-invest ay depende sa kung ilang krisis na ang pinagdaanan natin. Parang love life. Sa unang cheating, masakit. Sa mga susunod, parang alam mo na ang red flag, so mas prepared ka na. At ilan ito sa mga pinakahuling market crashes na pinagdaanan natin. Una, yung tinatawag na noong 1997, the Asian financial crisis. Massive economic collapse, but the region bounced back stronger. At noong 2008, the global financial crisis. The market crashed 50%, but within a few years, it reached new record highs. It was triggered by the collapse of the U.S. housing bubble, leading to the failure of major financial institutions, so stock market crashes and a worldwide economic downturn happened. And of course, na yung pinakahuli, 2020, the black swan that happened in the market, the COVID-19, the stock market fell 30% in 1 month, then rebounded and hit all-time highs in 2021. At kung babalikan nyo pang iba pa, mas marami pang mga nangyari na mas malala pa dyan in the past. So, crashes are temporary. Growth is permanent. If you invest during a crisis, you're basically buying at a discount. Kaya naman, ang tanong is, why is risk management important? Bakit ba ito importante? Let's start with a simple truth. Every investment carries risk. Parang sa pagtawid sa kalsada, sa gitna ng kalsada ng mga rumaragas ang sasakyan. Nakakatakot at malaki ang danger na baka mahagip ka at tumilapon at mapahamak. Pero tinuruan tayo ng bata tayo na dapat titingin muna sa kaliwa, titingin sa kanan. Or if you use a pedestrian lane and maybe even wait for the signal, you're minimizing your risk of getting into an accident. The same goes for investing. If you don't manage risk properly, one bad move can wipe out your savings. But if you take smart steps, you can protect yourself while still getting to your financial destination safely. So, risk management can, risk management can protect your capital from big losses. And also, it will also help you avoid emotional and impulsive decisions. It will also ensure a consistent long-term return. So basically, risk management is not about avoiding losses completely. Because, let's be real, that's important. It's about limiting the damage when things go wrong, so you can stay in the game and keep growing your wealth. That's the biggest intention that we should be having. At paano nga ba natin pwedeng ma-manage ito? So here's the thing. So some of the key risk management strategies that I can share with you is this, no? So how do we handle risk? It's like driving a car. Hindi mo pwedeng ma-eliminate ang lahat ng risk sa kalsada. But you use seatbelts, airbags, and defensive driving para at least safe kang makarating sa pupuntahan mo. And above all, you don't engage in a road rage, ha? So, in investment world, the 4 best tools for managing investment risk are: number 1, asset allocation. Think of this as your financial meal plan. Yes, mahilig tayo mga Pilipino sa rice. Natatandaan ko pag nasa Europe kami, ang problema palagi ng mga kasama ko kung saan makakain ng kanin. Kasi hindi sanay sa tinapay lang. But you don't eat just rice every day. Tama ba? So you mix it up with some protein, some veggies, some carbs. In investing, the same applies. A good mix of stocks, bonds, and cash ensures you're not overly dependent on one type of investment. Pangalawa, diversification. Narinig nyo na po ba yung kasabihang, of course, gas-gas na ito, don't put all your eggs in one basket. Bakit? Kasi if one investment fails, others can balance it out. And pangatlo, hedging. Para bang kahit gaano ka ka-healthy sa lifestyle mo, still you buy health insurance, right? This is like getting insurance to your portfolio. Some investors use gold or even options to minimize losses. And lastly, rebalancing. Over time, your investments might become unbalanced. Maybe your stocks have grown too much compared to your bonds. You need to rebalance so you don't take on more risk than you intended. So, tutukan natin tong diversification na ito. Pag-usapan natin tong diversification na ito. Imagine you own only tech stocks. And suddenly, nagkaroon ng tech crisis. Your portfolio could drop 50% overnight. But if you also had real estate, bonds, or consumer goods stocks, your losses wouldn't be as bad. That's the power of diversification. It's like having multiple streams of income so that when one is struggling, others keep you afloat. Basically, diversification is number 1. You can do it by asset class. So, nandyan yung stocks, bonds, real estate, and commodities. Pwede niyo po siyang explore lahat ng iyan. And also, you can diversify by industry. Don't just invest in one sector. Mix tech, healthcare, finance, and consumer goods. And you can also diversify by geography. If our country is struggling, yun ang pakiramdam ninyo, having investments in other countries helps balance your risk. Though, diversification doesn't guarantee profits, but it protects you from catastrophic losses. So why diversification is important? Parang sa buffet. One item plate are risky. Imaginein mo ito. Nasa buffet ka tapos isa isa lang na pagkain ang inilalagay mo sa plate mo. Or imagine eating only fried chicken every day. No balance, no nutrients. Wala itong pinagkaiba sa pag-i-invest sa iisang asset class lang. Diversification is a well-balanced investment meal for long-term financial health. So, here's a sample of diversified portfolio. Notice how it's balanced across different assets. Now, tignan niyo po ito, no? For example, 50% ng iyong portfolio nilagay mo sa stocks and 20% sa bonds, 15% sa real estate, 10% sa cash and fixed deposits, and the remaining 5% nilagay mo sa alternative investment such as gold. So, but remember this your mix should depend on your age, goals, and risk tolerance. Depende po yan doon. A young investor can afford more stocks while someone near retirement should have more bonds and cash. So for example, sa sample portfolio na ito, yung 50% na stocks, this will serve as the growth engine of your investment. But even within this category, you can still further diversify. Like for example, nilagay mo sa local stocks, sa BDO, sa Ayala, sa SM, and meron ka rin ng global stocks like Apple, Tesla, or Microsoft. And you can also use different sectors such as tech, consumer, finance. This serves as high risk but high return potential. And then yung 20% will serve the safety net, the bonds. So even that, you can further diversify. Pwede ka maglagay sa government bonds, safe but lower returns. Sa corporate bonds, higher returns, moderate ang risk. So this section will act as a brake when the stock market crashes. So real estate, yung 15%, it will serve as your passive income. Rental properties and REITs. So steady ang cash flow niya and it will also provide you a property appreciation. This will protect you against inflation. And yung cash and alternatives, it will balance the risk. So yung cash, yung 10% nilagay mo sa cash as emergency funds and liquidity, yung gold na will serve as hedge against inflation. So you may also use crypto, high risk, high reward investment yan. But remember this in forming your portfolio, importante ang risk profiling. Hindi lamang ni investor but as well as ni investment. Imagine you're riding a roller coaster. Some coasters have wild loops and steep drops. Meron naman gentle lang ang slopes. Now, think of your investments the same way. Some are high-speed thrill rides while others are smooth and steady. This is where better risk profiling comes in. Pag-usapan natin ito. Let's understand better risk profiling in diversification. Ano bang ibig sabihin ng beta in investing? Beta measures how much an investment moves compared to the overall market. Like for example, a beta of 1 means it moves in sync with the market. Paano kung ang beta ay mas mataas sa 1? That's your thrill ride. It moves more aggressively. Pero kung ang beta ay below 1, that's your steady ride. It moves less than the market, offering more stability. Bakit importante ang beta sa diversification? Kasi if your portfolio is full of high beta investments, it's like riding only extreme roller coasters. You might enjoy big gains, yes, but the drops will be brutal. Pag bumagsak yan, parang gusto mong iduwal lahat ng ipinasok mo. On the flip side, if everything is low beta, your growth might be too slow. Kaya naman, pag sinabing well-diversified portfolio, balanse dapat ito ng dalawa. Some excitement for growth and some for stability for protection. So, before you invest, ask yourself, do you want the adrenaline rush, the steady cruise, or a mix of both? Understanding beta helps you build a portfolio that matches your risk tolerance and long-term goals. Bigyan natin ng sample. Because beta tells us how much an investment moves compared to the market. If everything in portfolio has a high-tech beta, or high betas rather, Meaning, they move aggressively, like growth stocks. So, makikita ninyo dyan, ang beta niya between 1.2 to 2. So, it means you're in for a wild ride. But if all your investments are in low beta, like for example, real estate, your portfolio might be too slow growing. So the key, mixing both to create balanced, diversified portfolio. Yun ang susi. Paghaluin mo yung dalawa. So smart investors don't just pick random investments. Yun ang kaibahan nila sa atin. They strategically blend different beta levels to create a portfolio na can weather market swings while still growing wealth. That's how beta makes diversification even more powerful. So, sample natin. Let's say, meron kang 1 million peso na portfolio. And ano ang gagawin ko kung gusto kong i-diversify ito? Isang sample niyan is pwede mong, let's say, 30% ilalagay mo sa high beta investment. So, growth stocks, tech stocks, so that's 300,000 pesos. And another 30% sa moderate beta, like blue chips na stocks, REITs, so nilagay mo dyan, 300,000 din. And then low beta could be bonds, fixed income, so 200,000. And the negative or zero beta, like gold, cash, 20%, so 200,000. So, ano man ang mangyari sa market, hindi ka ganong kakabado. But of course, hindi rin ito ganong ka-exciting katulad nung ginagawa ng iba. So, why beta-based diversification works? Kasi it helps you balances risk and return. A mix of high and low beta assets, sisiguraduhin nito na magkakaroon ka ng growth without extreme losses. It will also hedges against crashes like gold or bonds cushion losses when the stock market drops. And smoother portfolio performance. You won't experience wild swing in portfolio value. So ano ang dapat nating iwasan? Ano ang mga dapat nating iwasan sa mga bagay na ito? Para maiwasan natin yung mga pagkakamali sa pag-i-invest. So number 1, So mistakes and beta risk profiling. Kung ang portfolio mo ay high beta, all high beta investments, ibig sabihin, too risky ang ginagawa mo. Example, investing 100% in tech stocks could mean huge losses pag bumagsak ang industry na yan. Ganon din naman kung all low beta investments, too safe, mababa ang growth niyan. For example, a portfolio of 100% in bonds is safe but won't keep up with inflation. So now, for example, inaayos mo ang beta profiling mo. Pero, ang problema, hindi ka naman nagre-rebalance ng portfolio mo. Not rebalancing as beta shifts. So, anong nangyari? So, ang nangyari, unmanaged yung portfolio mo. A stock that was once stable, like for example, ang stock investment mo dati nasa beta 0.9 ka, may become highly volatile beta, like for example, 1.5 over time dahil hindi mo siya nire-rebalance. Kaya again, while investing, you should manage your risk not only at the beginning, but all throughout the journey. It's a continuous process. Anong ibig sabihin nito? So the key message here is managing risk isn't just about diversification. It's about smart decision making and avoiding common pitfalls. Ano ito mga dapat nating iwasan? Number 1, over-diversification, spreading too thin. Ano ang nangyari pag ganyan ang ginagawa natin? Some investors buy too many different investments, leading to diluted returns. Halimbawa, if you invest in 100 stocks, of course, mas magiging mahirap i-manage ang portfolio mo. At yung gains ng mga strong performing stocks mo, hindi mararamdaman dahil naka-cancel out ito ng mga weaker stocks. Anong solusyon? Stick to 15 to 20 solid investments across different industries and asset classes. Pangalawa, emotional investing, fear and greed. So anong nangyayari dyan? Many investors panic sell when markets drop. Or yung FOMO buy, fear of missing out when prices are high. Halimbawa, you invest in a stock because it's trending on social media, but when it crashes because it was overhyped. Ang solusyon is stick to long-term strategies and avoid making impulsive decisions based on market noise. And pangatlo, ignoring portfolio rebalancing, katulad ng nabanggit ko kanina. So anong nangyari? Over time, your investments drift from your original allocation, exposing you to higher risk. For example, if your stock investments grow from 50% to 70% of your portfolio, you're now taking on more risk than intended. Ano ang dapat gawin? Anong solusyon? Rebalance your portfolio regularly, at least once a year. Pwede mong ibenta na ang mga tumaas na and reallocate to maintain the balance. Remember, tandaan natin ito, diversification protects you, but balance is the key. Not too much, not too little. Don't let emotion drive investment decision. Use strategy, not fear or greed. So rebalancing your portfolio regularly to maintain the right mix. So invest smart, not based on hype. Alright? So I hope kahit paano may natututunan po kayo sa pinag-uusapan natin to. Bottom line, yes, nakakatakot mag-invest, lalo na kung sa tingin mo, horror ang nakikita mo sa paligid mo. Pero tandaan natin ito, no? Crashes are temporary, growth is permanent. If you invest during a crisis, you're basically buying at a discount. Meaning, crisis is the best buying opportunity. During crisis, mayroong dalawang kaisipan. Two mindsets. There are two types of people. Number one, the losers. They panic, sell everything, hold on to cash, and miss the recovery. Yung isa naman, the winners. Stay calm, invest in undervalued asset, and wait for the inevitable rebound. Kaya naman, the rich get richer during a crisis because they see opportunities while everyone else sees fear. So, sino ka sa dalawa? Guys, you don't need to be financial genius to take advantage of a crisis. You just need the right mindset. The next time the market crashes, don't panic. Look for opportunities, invest wisely, and stay patient. Because when the dust settles, those who stayed in the game will be the one reaping the biggest rewards. Ang simpleng ibig kong sabihin lang ay, smart investors manage risk, not avoid it. A lot of people think the best way to protect their money is to avoid risk completely. Maririnig mo minsan, investing? Too risky. I might lose money. So they don't do nothing. They keep their cash in a savings account and feel safe. But here's the reality. Avoiding risk doesn't protect you. It just guarantees that inflation will slowly eat away at your money. Kaya solution is diversification. At hindi lang diversification, samahan mo ng konting pasensya. So diversification and patience lead to long-term wealth. We all want to build wealth, but let's be real. Getting rich overnight is a myth. The real secret? Two simple but powerful strategies: diversification and patience. Diversification, spreading your investments across different assets like stocks, bonds, real estate, and businesses to reduce risk and maximize growth. Of course, yung pasensya. The stock market goes up and down, but history proves that over time, it always trends upward. The biggest mistake? Jumping in out of investments based on emotion. Ang mga matatalinong investors, they stay the course, letting time and compound growth do the heavy lifting. So simple lang ang formula. Diversify your investment, stay patient, and watch your wealth grow. So, stay calm, stay invested, and let your money grow. Oh, by the way, You may continue your learning journey with me by grabbing copies of my books. No? Nandiyan po yung Financial Planning for the Fast-Changing World, The Seed Money, and Life Begins. Available po siya sa lahat ng mga national bookstores, or you may order it as well from the comfort of your home through Lazada. I hope some of my teammates will be able to put the link sa chat box para sa Lazada link, no, if you want to order. So, free shipment po kami ngayon. Scan nyo lang po yung QR codes. And also, sana supportahan nyo rin po ang bagong libro ko pong lalabas, Destination Wealth, Building, Growing, and Leaving Legacy. You may also connect with me through my various social media platform. No? Nandyan po yung YouTube channel ko po. Ang dami nyo pong mapupulot doon. Sana mag-subscribe po kayo sa Facebook. Pwede nyo po akong i-follow sa Instagram, and also we have website cardinalbuoy.com. We've covered a lot today: understanding risk, the power of diversification, and the mindset of a smart investor. But if there's one thing I want you to take away from this is this: you don't build wealth by avoiding risk. You build wealth by managing it wisely. Investing isn't about chasing overnight success. It's about making strategic choices, staying the course, and letting time and patience do their work. Of course, no, the market will have its up and downs. May sariling buhay yan. But those who stay diversified, stay disciplined, and stay invested will always come out ahead. So starting today, make a commitment to educate yourself, to take action, and to build a portfolio that will not just withstand the storms but thrive in them. Kasi ang pinakamalaking risk is hindi ang market. It's letting fear hold you back from the financial future you deserve. Now, go out there, take charge, and build your wealth with confidence. Oh, before we wrap up, no, I just want to take a moment to express my deepest gratitude to everyone who made this event possible. A huge thank you once again to Mr. Henry Ong, whose vision and commitment continue to guide us in our journey toward financial empowerment. And of course, no, to all of you, our participants, thank you for being here, for showing up for your financial future, and for investing in your own growth. Remember this: wealth isn't built overnight, and it isn't built on luck. It's built on strategy, patience, and willingness to take smart risk. Keep learning, keep diversifying, and most importantly, take action on what you've learned today. Kung marami kayong napulot ngayon, wag niyo pong sayangin yan. Hindi lamang po yan iniiwan dyan sa inyong mga kwaderno, sa inyong mga journal. Gamitin po natin ito sa totoong buhay. Financial fitness is a lifelong journey, and I have no doubt that each of you is now better equipped to navigate it with confidence. Wishing you all continued success, and I look forward to seeing you again in the next Financial Fitness Forum. Thank you and have a great day. And with that, maraming salamat po. Thank you so much, RFP, for having me, and thank you so much for patiently listening to my sharing. God bless you all.